Hello traders and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, November 9th. Michael Boutros here with you this morning. Dee, good morning to you as well. Iman, Peter, Pete, and Peter are all here today. Pooja, Steve, Tom, great to see you guys. Mark, as always, Iman, a pleasure. Good to be with you guys this morning. So we finally starting to get some moves in the markets. The dollar did turn lower, but it hasn't broken the monthly open. We're sitting on that as support, so we'll go over that in a moment. But we do have some very interesting price action on the dollar crosses, as well as some of the equity markets. I'm sure you might have seen Jamie tweeted a chart of the Nikkei big outside or big reversal day right off of a long-term slope resistance. You're seeing the S&P futures also turn over pretty heavy here ahead of the U.S. Open. So as I said yesterday, it's been hard to get excited about anything in this market, but what matters is that the levels are clear. Momentum will come through phases, and volatility will oscillate through phases where you get surges in volatility, super tight contractions in volatility. That's where we are right now. So we're waiting for that upswing, okay, in broader market volatility to start coming into play. Again, we're just heading into the open of November trade. A lot of nice opening ranges are in play. It is it's Veterans Day tomorrow, not really a major holiday, but heading into next week, you're going to head into that Thanksgiving holiday here in the U.S., so you're likely to see a little bit more, where things start to quiet down, rather, midweek next week. Quick scheduling note, I will be out actually on Sunday and Monday, guys, so the webinar next week will be on Wednesday and Thursday mornings instead of Tuesday, Wednesday, and Thursday. But just a side note there, swing updates should still be out as scheduled. All right, so let's jump into this. Hey, man, great to see you. Real quick, here's what we look like on the index. This is something that we've been following, obviously, for a couple of weeks. Here's the index as it looked early in the week before we opened on Sunday. Again, we wanted to stay bearish, really looking for a turn below the monthly open, 94.63, to get this thing going. You saw it open up the week, try to press those highs into long-standing 2012 long-term trend line or slope. Again, failing yet again, pulling lower. Here's the monthly open, holding as near-term support. Ultimately, I am favoring a move lower. Now, you see these highlighted regions here. You have the 100-day moving average and former slope. This is the 50 line, or this is actual median line, excuse me, of the broad structure we've been following. Those converge a little bit lower, but just ahead of that, this zone right here, 94 and 94.15, former swing highs for the August trade calendar month, also the 236 retracement, and that coincides on slope support as we head into next week. So downside targets on a move lower. Obviously, if we break the highs that we made this week, you're still looking for a stretch into 95.90. Not my favorite scenario, but always have to have a game plan for both sides of the market. So looking at the momentum signature, it also looks like it's coming right up against that support trigger that we've been watching since Monday. Material close here today, and especially if that happens alongside a move below the monthly open, that would sort of put us in play for that move towards 94. So the index finally giving us a little bit more clarity here. Again, this is what the intraday chart looks like. There's that monthly open. We're trying to probe through that right now. Okay, if we do break lower, initial target's 94, 94.15, and then again that basic slope support off the lows here, that converges pretty nicely right on that 100-day moving average. So the levels are super clear, okay? It looks like an objective break of the weekly opening range low. If that is the case, we really should see market hold below 94.77 on a rally into the U.S. Open. So look, we still might be in the tail end of this contraction and volatility in this really tight moving ranges, guys. So don't get too ahead of yourselves, but it is certainly looking encouraging. Definitely as we head into next week, that some of these ranges may finally break and give us some clarity. Okay, any questions on the dollar index? Keeping in mind, obviously, the thing that we'll be looking at heading into the close of the week tomorrow is going to be the major, where's my DXY? That major trend line, okay, and whether we're able to close below this slope that we've been watching on the weekly charts here for some time. Okay, and again, 93.89, as we just noted, down here it's 93.80s, 93.79. This region here, well, the 89 region is the low week reversal close for 2016. So the levels all line up perfectly, okay? We'll see if we can't get that move lower in the DXY. That's number one on the session. I'm just going to run through that real quick. If you have any questions, feel free. Michael, is there any fundamental reason behind all of a sudden this sudden sell-off, which happened 2 or 3 hours ago? You know, I try not to stress a fundamental reason. You know what I'm saying, Ima? I definitely look through the headlines. There are some headlines coming through. Obviously, the whole thing with taxes. We're waiting for the Senate version of that tax bill to come out here in the United States. Also, you've heard the score that came out showed that actually we'd see 25% of Americans would see a hike in their taxes by the time of 2017. So there's some things that are starting to suggest that, okay, this thing might not actually come together here in the States. A lot of people are blaming it on that. But Iman, you know, I don't need that fundamental reason. You know, I'll look through that, through the headlines later for that kind of justification. But at the end of the day, price action is what speaks. That's the only thing that matters to me. If support is broken, support is broken. If it's broken because we got a headline that came out, or it's broken because taxes didn't get passed, you know, doesn't make sense. Doesn't make a difference to the fact that price broke support. So I always try to keep my focus completely on what price action is saying. But there are a couple of headlines that are coming out. I don't know if that's what's sparking this, Iman, to be quite frank with you. But where we're turning certainly makes sense, right? Especially as we talk about something like the dollar index, as we've been looking for a turn from resistance. Just because it actually turned from resistance doesn't necessarily mean there's a fundamental shift in the underlying metrics, right? It just means that markets found resistance. The bulls are getting exhaustion. You start to see them close out those positions. People who are looking for the short start jumping in. Now all of a sudden you get, you know, near-term pullback. So think about more of the psychology of price action necessarily than any changes in fundamentals. Obviously, there's a major announcement, Iman, that's going to change things right off the bat. But I don't, you know, outside of a quick scan this morning, I didn't really see anything that pressing. Okay. Specifically, if you look at something like the Nikkei, for example, I'm just going to jump into it just because that chart that Jamie had. Upon reviewing back on my charts, I had the same exact line. I just haven't been tracking this. Look at the daily chart, guys. Basic trend line support off the lows from 2012, and again in 2014, you saw another test. The break saw acceleration. Look where we just peaked last night. I mean, you can't make this stuff up, right? So, Iman, was there a fundamental shift that happened up here, or did markets just come into resistance and pull off? That's how I look at it. So certainly there's some things to suggest that something here is going on. That's a pretty big outside reversal candle right off of slope resistance. It's a very, very, it's a strong tell, let me say that, when you're looking at near-term price action on a move like that, especially if we close at these levels, would certainly suggest that there is something at hand here. You want to respect that high, and you want to make an assumption of near-term, at least pullback in price. Now on the daily chart, on the Nikkei here, you know, specifically with the price action outsized as it is today, you want to see a confluence break in the close in momentum below 70. That would be a pretty compelling trigger for some further weakness on the downside in equities, or specifically in Nikkei, which has been, you know, just ripping ever since that breakout of the 2016 high day close back here in October. Huge breakout. So nice area, a nice region to find resistance. Momentum knocking on the door on 70. Okay, as long as it's an overbought, you want to be very cautious about trying to make assumptions on the high. But if we are able to crack and close below 70 on a daily close basis, with a candle like that off that region, that would certainly shift my focus lower, at least, you know, for a run into the monthly open, 2220 or something like that. Make sense? Iman says, got you. Thanks. Hey, you're more than welcome. Okay, so we took a little segue there for the Nikkei. I'm going to put that as number 2 on the session. Okay, dollar yen. Another one we've been following. You know, might as well just start off with the top-down approach. Here's what the weekly charts look like on dollar yen. This is the reason we were looking for some sort of exhaustion trade on the upside. You saw that the basic 618 retracement of the entire decline, 114.30. We opened up that 114.30, 114.50 range. We've been watching it for weeks as the major key resistance here in dollar yen. Now it looks, again, pretty convincing here. Momentum kind of getting rejected right at the 60 region, pulling lower. So yeah, you know, we've been looking for a turnover in dollar yen. It's been very frustrating. But like I said, sometimes patience pays in this business, and certainly if you were patient with it, we are starting to get the turn finally. Even on the stretch that we made early in the week, if you guys remember on the open of Sunday, we talked about this on Monday morning. As it failed right at a median line parallel. It's a parallel, the same slope that we're working off from the lows. Caught the high, caught the high, caught the high, no closes, compromised the 114.30 level. And again, if you bring this into a line chart, it's very, very clear that we're struggling at that region. Okay, we even made some pretty compelling divergence on this high as price action pushed into a new high. The oscillator made a lower high. And again, both of those reference points closer to 50, not in the extremes on either end, is a pretty compelling signal. So everything does look, you know, from a technical standpoint, it looks appropriate to want to be bearish. Okay. Today's move, if we close below here, will finally be a break below the monthly open, which has been a decent pivot in this trade, and we haven't been able to close above that since the start of the month, or close below that since the start of the month. So today would be, you know, a welcome move if we're able to finally make that close. On the intraday charts, let me also point out one thing: that momentum trigger that we've been watching, 1 touch, 2 touch, 3 touch, we broke it on the way up. We even tested it as resistance. Okay, and the pullback again, really confirming, at least in the momentum signature, a shift in the broader momentum profile. Intraday chart looks like this. Okay, looks like we're drifting below the bottom bounds of the lower median line parallel. Again, I've been talking about 1344, guys. That's what we've been watching for dollar yen for some time. Here's the dollar yen update from yesterday. That's the level we need to break. You know, we're dilly-dallying there now. I do want to see it open the market and push lower, sub 1344. If it rallies on a real near-term approach, literally look for resistance right along that same slope. You know, if this is a breakdown, we should be seeing acceleration. I don't want to see this stall here into the U.S. Open and recover back up higher. So if we do rally, look for resistance right along that slope. I want to see that hold. Again, soft targets are going to be right at 113, basically the lows that you made here on the tail end of October. But really, you know, ultimately you're looking for a drop as low as 112, 1190, 1165. Okay, now I don't have any slope for the decline yet. I kind of would love to have some sort of structure. Yesterday, I think we were looking at this. Let me add it on again. Didn't seem too clean to me yesterday when I was putting together the report, but this is what we were looking at in the webinar. I think we threw this together. And, you know, the 50 line is not offering much of anything. You know, we haven't touched resistance and we haven't touched support. The only thing I do like is that the slope is actually pretty decent. Okay, if you just move this over to the downside, pretty nice resistance. If you move it over to the underbelly, pretty nice support. You know what I mean? So a drill like that sometimes will be helpful in just sort of ascertaining what you want to do. And at this point, I'm kind of just watching this right now because if we do drop lower, that initial target I told you around 113, if we take those lows, look where it shows up. Right along the median line. So sometimes it's worth it, you know, just to have it on there as a reference, but you don't really want to get too wrapped up in trying to play levels off of this slope until we get some sort of conviction rebound off of one of either resistance or support. But the first 2 points, the first 3 reference points, finding you know, that slope, you know, gives me an idea that, you know, maybe we're on the right gradient. So I'll keep that on there for now. It continues to shift the focus lower while below the overnight highs. That'll come on slope resistance right here. Okay, so immediate focus is lower sub 114, near-term support right at the 113 handle. Ultimately, like I said, I think you still look lower here in dollar yen. Questions? Okay. So there's not really any U.S. data to be crazy about heading into the close of the week. You do get the University of Michigan confidence surveys here in the United States tomorrow morning. Might offer some volatility, but I'm not really expecting much out of it. So, plus it's Veterans Day, so might see a little bit of thin liquidity here in the state side of things. Long story short, looking lower below today's high. Critical resistance and bearish invalidation hasn't changed one bit. 114.30 into 114.50, that's the level you're trading against at all times as far as the short side in dollar yen. Okay. Aussie, number 4. You know what? I have a whole bunch of yen crosses I do want to cover today, but I do want to just go in order here for now. Let me just get Aussie and Kiwi out of the way. Here's what Aussie looked like from last night. You know, the only thing I wanted to give you an update on this is, look, we've been talking about this critical resistance support rather at 76.23 literally for almost 3.5 weeks now. So nothing changes. The opening range for the month, the opening range for the week, all taking shape right above a key support region. Love those plays. I love those plays. So we have clear conviction. If we break lower below 76.30, not my favorite scenario, but if we were to break lower below 76.30, you're looking for a quick target at 75.70, but the big Bahama Mama would be down here, 75.15. Okay. On the weekly charts, just to show you why those levels are so important, you know, if you take a look here, oh, wrong chart, Aussie. If you take a look here, there is 76.30. Okay, we talked about both Fibonacci retracements. We talked about the 52-week moving average. We talked about slope support. Here's a parallel, the same slope we've been following off the lows, all stacked up right here. If we drop lower, like I said, that initial target near 75 and change, but 74.75, big region. That's the final basic objective slope support for the uptrend. Okay, so even if you do take a shorter, even if this does break, you know, you want to trim any expectations on the downside as you get into 74, 75. That's really where I'd be looking to take anything off on the short side. But right now, the immediate short side bias at risk, and we've been looking for a recovery. We've been looking for some sort of concerted rebound. Here's what it looks like on the daily chart. Okay, 618 retracement of the objective advance off the lows that you made back here in May. The 50 line for the current slope just off the highs of this year. And your topside resistance, you know, you saw that pop early in the session, but your topside initial resistance is right at that 200-day moving average. We've been talking about that, just shy of 77. And we've been holding this range since the start of the week. This is what needs to break. A downside break, there's that 75 region. Okay, big stop. If we break to the upside, great. The monthly opening range high comes in right below the 2016 high day close, which is right on the median line, and that gives you a range of resistance into 77.35. That's the breakout territory that would shift the focus higher for Aussie. So this one's been a little frustrating. As far as near-term trades are concerned, I mean, it's a simple range. The levels are unchanged since earlier in the week. Here's what it looks like right now. Here's what we were looking at last night. You know, we just noted again the weekly and monthly opening range right above this key support zone. So 76.32, that's your support. A break above 77 puts us near-term constructive, but you need to break 77.40, the median line, the 2016 high day close, that region, to really validate that a more concerted low is in place. And a move like that would actually give us an objective measured move. We would take a range of this, look for the 100% extension, that would sort of be a target for the longer term. But as it stands, the focus right now is still on a break of this range. Okay, and the emphasis still is on 76.32, big 76.30, big region of support. And that's all my focus has been on for the Aussie guys, all week long. Anything you're trading, whether it's on the short side, you want to take targets ahead of that, and if it's on the long side, your stops need to be against that. Very simple. Okay, and until we get that near-term break, focus on this range. So not the most exciting trade, but levels are super clear. So we're going to continue to focus on this Aussie trade as we head into the close of the week. Here's what Kiwi looks like, and then we'll get into all sorts of Kiwi crosses that are looking very interesting as well. So this will be number 5. Another one that we highlighted. Just wanted to give you an update on the back of the RBNZ interest rate decision. You know, obviously they held rates as expected. You saw some mixed commentary as far as expectations moving forward. Markets actually brought forward a little bit expectations for an interest rate hike, but you know, they continue to cite real concerns about the incoming government and what those policy changes, if any, could mean for the future path of monetary policy. And they would say there was literally a quote that hit the Bloomberg terminal. that said that the RBNZ committee said that there would be a circus, quote unquote, if outsiders were brought into the policy meeting as far as new board members. So it's been pretty interesting commentary. Nonetheless, it's just noise. The breakout, we've been looking ever since the start of the week. If you go back to the Sunday update for Kiwi dollar, we said we're looking for an early month high. Oops, that's not what I wanted. Here's what the update looked like on Kiwi. Okay. Could see a more upside heading deeper into November trade, and then early, we said we're looking for a high early in the month. So it's the 9th. The market has been rallying off of a big support over at the 2016 Open. That was 68.28. We talked about that as we closed out last month. Here's the rebound, and we were looking for failure, or I was looking for failure at 69.50 or at 69.90 into the 70 handle. These are my two ideal scenarios for where this thing could find exhaustion. You see that we just made a big old outside reversal candle just ahead of that first target. So I do think, that near term, I'm looking lower in this thing. Momentum has not been showing divergence, but certainly been struggling here to make any further highs as price action has pressed higher. The tell for me would be a break below 69.19. Okay. That'd be a nice move that would compromise basic slope support, which has been tested on multiple accounts. If you bring this into a 120, you can see that a little clear, okay? And the median line. So again, that confluence break would shift my focus back towards soft target at 68.73, just because it's the weekly opening range low, excuse me, for the week, and it's also the October low day close. So really nice level there. That's just a soft target. If we get through that, you'd look for 68.28, and then subsequently wouldn't stress the 50 line, but certainly 67.40 comes up as a big zone as well. Okay, remember the broader picture here. As long as we stay below 70, I'm still looking lower. Here's what it looks like on the daily chart. Basic slope support. Also converges on that 100% extension from the decline. This was a perfect low. Gives you 70 handle. Take this out to a weekly chart to get a broader view of where we are in trend, and you'll see that same slope support, same 100% extension, and actually a 38.2, the entire advance, gives you a little bit more room to the upside into 70.30. I told you about that yesterday. Specifically as you get out in time, that'll move a little bit higher as well. But broadly speaking, I'm looking for exhaustion. And if this break is legit of this multi-year trend line, then we should find resistance here, and the break below the yearly, opening range lows, which is exactly where the monthly opening range lows essentially is, would be an objective shift to focus lower. So all the time frames for Kiwi sort of suggesting the same thing. We should be looking for some sort of exhaustion high early in the month. I'm inclined to like this here, to be quite frank with you. But it's really the break below 69.20 that'll validate a little bit more of a concerted shift in Kiwi. Any questions on New Zealand dollar? Calling Aussie dollar boring is an insult to boring. Pooja, it'll come back. You know me. Over my career, I told all of you, Aussie dollar has been probably the trade I've just traded the most. I don't know what it is about it. It just, I tend to love that pair. So yes, I feel you. When Aussie's not moving, it's like someone shoving bamboo sticks under my nails. It's not an enjoyable experience, but that will change. And I think once we clear that monthly opening range finally, Pooja, I think we finally get some play there. Iman's agreeing with you, saying 2 maximum boring, same level every day. Yeah, I know. And we go over it here in the webinar. And guys, I know it kind of can get repetitive, but patience pays. When these ranges break, because we're so well aware and we have those levels that we know what we're looking for, whenever it does happen, whether it's this week or whether it's next week, at least we are well informed and we know what to expect as far as the directional move beyond that. Eman says, I started playing the range game. There's nothing wrong with that, Eman. You're talking to a guy who's all about that. I have no problem with trading these intraday. I've been kind of snipping away really small position sizes on some of these ranges as well, and there's nothing wrong with that. It's just that this is what you want to do, Eman. You want to make sure if you're trading in the direction that you think the break may happen, those trades you want to be a little bit regular size leverage. The trades where you're going against the directional breakout that we're hoping, you want to be trading at a lower leverage, okay? Even when you're just trading the range. So make sure we're always doing that, because if we do get the material break, I want to be well positioned where I can leave some of that trade on, right, to play out the break. But nothing wrong with playing this on the intraday within the ranges. They're pretty clean. That's when those types of strategies will actually perform the best. Okay, so let's take a quick segue into some trades. There's a couple of pairs here that I want to cover that we haven't necessarily been talking about, but just looking over this in the morning, Kiwi Yen, interesting setup that we've been talking about the Kiwi, looking for the Kiwi to kind of turn over lower again. Yen, we're looking for dollar yen lower. Could put a big, big move in Kiwi Yen. And here's why. Basic confluence resistance. You're looking at slope support off of this year's low, so real near term. You got the lows they made back here in April. You got the subsequent lows they made in May. It grabbed again that low in September, early September. Hesitation before the break, saw acceleration. And on the upside, testing that line as resistance is a perfect confluence with a 38.2 retracement of the decline. Nice reaction. Certainly, if we break below the weekly opening range lows, that would constitute an outside day reversal off resistance, typically a very bearish development, and would shift the focus lower in Kiwi Yen. So one that we haven't necessarily been paying attention to, but guys, I want to bring it to your attention. We may get a nice play off this. Look for a break of that range low again to get this thing going. Don't necessarily have a near-term setup in play. Here's what I'm looking at. I've been watching this larger median line pitchfork off the highs. It's pretty darn clean. It's pretty darn clean. Look where the low found support, right at confluence support with the 786 retracement of the advance and the exact median line. Perfect touch before the rebound higher into that's former trendline support we just talked about in the daily chart, now turned resistance, and in that final high, divergence and momentum. So there's a lot of technical factors here that are all lining up, suggesting that you should be looking for exhaustion high here and a move lower. So again, a break of these range lows would be the start. Such a scenario, I'd be looking for these median lines as just near-term targets, but you're essentially looking for a move into here, 76.50. And 76.50, my friends, represents the 50% retracement of the entire advance off the lows for the year. Okay, so taking into account all of 2017 price action, and once again, the same median line that we tagged as support last week. So lots of room to the downside if we do clear this thing. The emphasis, the pressure, is all on this high at this point to hold as resistance. So very compelling setup here in Kiwi Yen that just kind of brought to my attention here this morning, but definitely something we want to be paying attention to as this thing turns. We're looking for a break of the weekly objective opening range lows to really validate a little bit more of a reversal trade here in Kiwi Yen. And then again, just going back and looking at how price action in different pairs react within the confines of the decline, in the confines of the ascent, the pair tends to do this very, very clearly. Consolidation, consolidation, break lower. Consolidation for a few days, break lower. Even on here, you see the spike higher, consolidation for a few days before you break lower. Spike higher, consolidation for a few days to resistance, break lower. Here it is. Is it going to break lower? That begins with a break of the weekly objective opening range lows, 78.50. So questions on, and again, if we do break that, that would be a nice outside day reversal. Beautiful outside day reversal. Those are very, very compelling signals when you see a move like that off of such a critical support confluence, resistance confluence. So keep your eyes on Kiwi Yen too. That's number 6. And just keeping with the Kiwi crosses, I guess, we'll go back and after this we'll jump into some of the sterling trades, but this is also one that drew my attention this morning is sterling Kiwi. It's an interesting pair. It's not something we talk about too often, but if the Kiwi turns over, we get that Kiwi weakness. We've been looking for the pound to maintain some of its legging here. Guess what? You're seeing some of that start to materialize here. here's the daily chart for pound key. We turned off of slope resistance earlier in the month right here. That level also represents a former swing low from back here in 2015, decent pivot, okay? And it converged on the median line. It was a little messy, but again, all the pound crosses will tend to do those throw over trades. So here's the pullback, a basic 236 retracement from the advance. So on a lateral basis, kind of at support. Intraday looks very interesting. Here's what a basic slope off the advance looks like. This is just off the lows for August. A parallel off that, saw resistance, really nice pivot, break, saw acceleration, break, resistance, break, saw acceleration, support, break, saw acceleration, resistance. This is what you want to be trading against. Okay, if pound yen today were to dump one more time into here, or if it breaks the weekly opening range highs, that would put us right back on the constructive path for pound kiwi. Questions on pound key? Just want to see what this looks like. In the scenario of a breakdown, okay, 184.67 would be a very important spot, but I digress. As it stands right now, guys, slope support, watch that big slope support. I'm looking for exhaustion here. We have the start or the makings of initial exhaustion on this really slight divergence in momentum. Again, if you bring this to a line chart, you can see it a little bit clear, that lower low in price as the oscillator made a slightly higher low in price. So it looks like it could have the onset here of a near-term exhaustion trade, but I would need to see this thing start to recover back above the 90 handle, 190, to get a little bit more conviction that things might be might be turning. Okay. Not the cleanest, but could be playing out. Okay, so that is pound kiwi. Interesting pair. We haven't been watching. Maybe I'll drop this on an update if we get some compelling price action today. But feel free to take a snapshot, guys, of this chart if you need it. That camera button, the top of your GoToWebinar screen. Now that we've gotten all our feet wet with the pound, let's look at what the pound is doing. Number 8. We'll move pound up to number 8, and then we'll do pound yen as number 9. So here's pound dollar. Cables right here. And here's what cable has been looking like on the intraday charts. So last update was on this was earlier this week. We were looking at this British pound chart, and we said, again, we've been focused on what, guys? 130.20 into 130.30 has been that key critical support range that we've talked about, both on the weekly front, both on the daily front. Everything that you look at sort of highlights this key region of support. There's 130.30, the outside reversal day that we made off the highs in July. It's been rock solid support. Again, really flirting with a break of this downside of this ascending channel. Daily chart, very similar scenario. Basic upslope support. I just don't understand how everyone's getting super bearish yet, guys. We're at support. Okay? If it breaks, great. I'm on board with you. But if it does, as long as it's above it, I can't make that assumptive move that it's going to break. So as far as this is concerned, again, I'm still looking to fade weakness as long as we stay above 30.20, 30.30. Now yesterday, or back on Tuesday when we wrote that report, we did choke up the near-term bullish invalidation level to 130.60, and I'm still comfortable with that. So any long exposure you take, you really don't want to put a stop anywhere too far beyond that region. That would be the concerted slope at this point. And it's also the October gap that we made here. We finally filled it last week, but it's still a level I'd be watching on the downside for support here on cable. Another trade that has a very objective weekly opening range just above support. I know it's Thursday, and sometimes the weekly opening ranges don't break till Friday. And honestly, I don't have any event risk that I'm looking forward to that could charge that break. Nonetheless, the clarity and price action is there. Clarity and momentum, not so much. Not so much. So the pound crosses have been, I think, a little bit more fruitful for me personally, just by looking at pound yen. Again, I'll show you that pound kiwi rather we just looked at. That's going to be something I want to operate on. Pound yen has been a great trade ever since the turn last week on BOE. So kind of know where to pick and choose your battles to reflect an opinion you have on a specific currency. And with the pound, I think versus the crosses, it's just been a little cleaner. It's just been a little cleaner. Having said that, you guys are all set here on pound? How do you approach trades that break the weekly opening range on Friday? So Pooja, sometimes I'm going to miss a lot of those. The way I actually do tend to take advantage of those breaks is when I'm scalping within the range. So for example, we've been talking about this range right here, right? So if we, first of all, this was a great long early in the week. It fizzled out, and you would have gotten stopped out on half the trade at least on break even on the pullback. But let's say we get this exhaustion trade here into the U.S. trade session, we jump into a long. On this trade, I would be taking half to 3/4 of the trade off and let the rest at break even to see if we get that final breakout of the opening range to the downside. If I'm playing shorts within the range, I really wouldn't be looking to do the same thing since we're favoring a topside break. But if you were someone who were bearish, for example, Pooja, you really had a strong bearish opinion on this, that's the way you would play. You'd play with inside the range, take most of the profits to the bottom of the range, stop at break even, see if you can get an extension to the downside break. I never want to chase a break of the opening range on Friday. If you're not already in the trade, it's classic chasing. It's classic chasing. Now, that's not to say that you won't get an opportunity. So let's say this does hold this range, breaks higher on Friday. You still might get an opportunity where it pulls back into the opening range highs to get long again and then play that last stretch. So intraday, you still would get an opportunity to possibly get in. It's just that I won't buy or break out of the weekly opening range. It's a tough call because your stop is just so far out at that point. Pooja, does that make sense? If the opening range is pretty clear into Friday and I'm looking for the upside break and I'm playing within the range, as we get into resistance, I will always take something off. But leaving it on for the extension is the best way to try to play a late month or late week opening range break. Okay, good question, Pooja. She says, thanks very much. You're more than welcome. So that is pound dollar. So pound yen, number 9, looks like this. Where's pound yen? Okay, so you guys have seen this setup before as well. It's from last night's update. And we pinpointed the high on this last week. If you guys remember, 151.97 is where we really wanted to see the clip. Here's the daily chart. We came just shy of it, obviously. Probed right in. 151.94 was the exact concerted high that we made. Turned right off. And again, ever since that break, we've been following it on the first. Here's what pound yen looked like. We were right here. That's this high. We started to look for a move lower. We wanted to see the October opening range highs break as the initial sort of signal for a move on 150.40 and change. And then ultimately, this 38.2 down here near the weekly lows. So we haven't quite gotten all the pullback yet. Okay, 149.20 is what we want to see as the initial target break to give us a little bit more of a conviction move. Obviously, this is a 120-minute chart, and this was back, last week. So since then, obviously, we took out 149.20. Here are the amended targets with the downslope. We talked about this on Tuesday when we made this chart and we added this extension. This is a 75% line of the range. It was a perfect resistance hold. Initial target, just shy, guys. 148.43 was the actual target. So far, the low is 148.45, so it's 2 pips off. I still think you're going to get it, but just watch momentum here starting to bottom out as price is still making new lows. Not necessarily a region to jump out of the trade, but don't get hung up here on this short. If it starts to fail into the U.S. Open, We're just 3 pips off that level. That level, by the way, is just a former swing high for the late 2016 high. Here's the December 2016 high. Okay, so a region you should be just looking at as a reference, initial target. Ideally, this thing drops a little bit lower. So you notice that I've been constructive on the pound, right? We like the pound dollar holding support, but that's kind of hairy right now. Pound Kiwi, I think, is a better bet because if the Kiwi turns over as we expect, and I want to reflect a pound bullish opinion, that's sort of the play. On pound weakness, if I'm trying to take a hedge, a synthetic hedge, or I want to sort of reduce any long excessive exposure I have on the pound, I think this one is a decent play, especially if dollar yen follows through and we get that yen strength in general. Obviously, we looked at the Nikkei and the implications for the turn that we just turned there. So that would mean a broader turnover in risk would sort of favor yen strength. So if the pound is going to break down, I don't want to be short pound dollar. I want to be short pound yen because just the implications of where we turned from and what near-term price action is doing, would have me looking lower. Now, again, that near-term divergence has me a little concerned that we could see a pop back to the median line, but essentially right now, the immediate focus stays lower while below that slope. Ultimately, 147.68 to 147.85, and then these two levels here, 147 and 146.71, both levels of interest for possible exhaustion. Remember, we're just playing the correction within the upslope. Okay, I don't think anyone's going to argue with me that this is not in a constructive path. Again, we broke above that 2015 basic slope resistance. We got 2 tags of it to really confirm that slope earlier this year. There's the break. All you're doing is playing the pullback off of slope resistance, just a basic channel. You would see to play the pullback. You want to stay constructive, broadly speaking, while above this region. But I'd start to look for near-term exhaustion. On a move into near-term slope support here. Questions on pound yen? Not for the faint of heart, my friends. Very, very volatile trade. I was writing yesterday in the report, even though we've seen these ridiculously tight contractionary ranges on all of these pairs, this thing is putting over 160 pips on the weekly range already. So nowhere to look to find the volatility if that's what you're looking for. And certainly they don't call this the widowmaker for no reason. If you're newer to the strategy or just getting your feet wet in near-term trading, might not be the best candidate for you to get started with. But if you know where to look, the volatility and the ranges are still there. They are still there. Okay, so that's number 9, pound yen. Euro crosses, and we're also going to cover the euro yen, another yen cross, which looks very compelling. But here's what euro looks like. So we talked about the level that we tagged as support earlier this week, and that was 115.54. Such a key region, a level that we've been watching for a while. The main regions of support, 115.54 and then 114.95, just below the 15 handle, are both levels of which we were looking for possible near-term exhaustion. Now you're looking at the basic 200% extension. This is the measured move of the embedded head and shoulders formation that we made just in August and September, not the broader one. I have very low confidence in the broader head and shoulders formation just because of the amount of material that's already been out there about everyone who's looking at it. And the more people look at it, the more people recognize it and identify it. I've just found over experience those are not going to be very profitable trades. So the one that I was looking at was this near-term embedded head and shoulders formation, and that neckline break was superior and clean. That measured move, my friends, was 115.54, and that was the exact low of the week. So inherently, you look for a topside bounce, but what was our bearish invalidation level? It was the monthly open. Guess where we found resistance last night, guys? The monthly open. So this thing is super clean. I don't know if this is the high, and we would look for the break below 1540 to give us that next target, which is the 2016 high day close that comes in at 114.95. That level converges on basic slope support. A parallel off the highs, that's all it is. We took a parallel off that and extended off that swing high. That gave us really nice pivots, was right there. We took a parallel of that and extended off of these lows, was perfect support, 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 turn just ahead of it. Right now, it converges on the 2016 high day close right below 115. Okay, the emphasis here on euro, guys, is a break of 115.45. Why? Because this is a very clean, in my humble opinion, this is a very clean weekly opening range. You opened up the week just below the 2016 high. It was resistance, 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 support, right exactly where we were expecting initial support. So we said, watch for a break of this range. If we break to the upside, look for a target of 116.46, but we have to clear that to convince any type of major reversal. The fact that this break of the weekly opening range high did tag that region, then closed a candle below is concerning. And this is what I like to call an opening range, a weekly opening range reversal. And that condition would be met with a break of the objective opening range lows. So false break of the opening range high. If we break the opening range low, that's a key opening range reversal, very, very objective price analysis. That would shift the focus again towards that lower parallel, towards that 2016 high day close at 114.95. Any questions on euro? It's interesting. Again, the price action, like I said, has been kind of weird, right? Volatility is still on a sort of contraction here, but the levels remain clear. We have to stay disciplined. I have to stay disciplined. Questions on euro dollar? And here's the daily chart looks like. So we, boom, is that exhaustion at the monthly open? Could be. The emphasis of that would come with a break below here. 1495, big, huge support confluence and broader bullish invalidation. Remember, we're still in a broad bull trend, guys. No one's arguing that. But this region here is where we would really shift the opinion on the broader picture. If this is a consolidation, look at this basic trend line, resistance, 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 break, fueled acceleration, that converges down here on the 38.2 retracement, on the 50 line, or the median line for the current operative trend, and basic slope support for the downtrend. All is right here. First things first, look for a break of the monthly opening range, the monthly open high, or the monthly open, excuse me, as the highs that we just made, or a move below 1553. Okay, that's euro. Interestingly enough, euro yen. This was number 9. This is number 10. No, euro yen's number 11. Here's euro yen. So with that in mind, and what the euro is doing, kind of still looking like it's holding resistance within the confines of the downtrend, put us lower. Here's what euro yen looks like as well. What I wanted to highlight here is this is also a trade that we've been following. I can't remember the last update where it was. Euro yen. All right, I don't want to waste time. It might have been a couple of weeks since we looked at euro, and pound yen was the most recent one. Here's what euro yen looks like on the daily chart. Okay, and what I wanted to highlight here is we talked about 134.29 as it was turning last week or last month, late last month. You remember this? 618 retracement, objective yearly highs, and slope resistance. Again, you know, obviously we saw a topside break, but the slope has still continued to be fruitful, both as support and resistance. So here we are sitting on the 50 line. We're also sitting at the former high day or high close, excuse me, for 2016. So it's the yearly high close. And that's been giving us this range right here at 131.70 as support. We're kind of looking for that break. Now, an objective break of that, a measured move, again, basic technical analysis 101. The extension of that range would give us an objective target at 128.80, 128.82 to be precise. And that would converge right here on the median line. Now, this is longer term outlook, right? This is not scalping or intraday here, guys. Just giving you a bigger picture of view here. Momentum, okay, is sitting right at 40. You know, if that were downside break were to materialize, you'd be at a risk, period. End of conversation. For a larger correction, down into that 128.80 level. So daily chart, pretty clean. Okay, euro we like, you know, kind of looking for a move lower, and yen, kind of like yen strength. So what does that mean? Here's what the intraday chart looks like. Here's a 240, a little bit cleaner. Puja helped us identify this slope earlier in the week, and it's been panning out pretty well. Now we're kind of messy along the median line here, but I still like where the convergences are. A basic objective hold below this region is resistance. Ideally, your initial resistance is here, and that's what we were talking about. That held yesterday, but the emphasis is still on a break below these lows. Okay, 3170, 3158 stretches into. If we clear that, again, soft target, yearly open, takes down to 130.68. 100% extension from the high, takes down to 130. And then again, that measured critical move of the break would actually give you a longer term target down here at 28.80. So another one, yen cross is going to determine some yen strength is going to help in this one, and also if the euro does turn, combination of the two can possibly fuel a really nice move lower here if this breaks. So watch this key support. Watch this key support in euro yen. Okay, last but not least, another one that we haven't necessarily updated on the daily or on the intraday updates for the swing side trade, but something I was looking at this morning, euro key. So if euro does turn higher, this is one of the ones I'd actually be interested in playing. Where's euro key? Here. We're at an interesting support level. Okay. Basic median line support. This formation has been sort of ridiculous. Okay, we've still stayed broadly. It's not the cleanest thing. Okay, but broadly within this formation, basically since the start of the year. Here's your late December low. Here's your December high for last year, and here's the actual low for the year of 2017. Median line has been a very decent pivot in price on both sides. Upper parallels caught with a little bit of hesitation, the resistance. In fact, if you take a parallel of that, you touch it right there, you can see that we almost scratched it before turning over. So classic exhaustion trade there. But where's the decline out now? Well, we're trading within the confines of this descending channel formation. There's a nice convergence right here of the 50 line, or the median line rather, excuse me, of the ascent and basic channel resistance. I'm looking at that. My biggest problem with this trade is I don't like where we turned. I don't like that this, I don't necessarily have a major level there that we turned from. But if you take a look at it on the intraday, or excuse me, here's what it looks like. Or this was the intraday, excuse me. If you take a look at it in the daily rather, here's what it looks like. So if this is a false break below this confluence region, the break above these weekly range highs would certainly shift the focus right back to the upside. So if we get the Kiwi weakness that we're looking for, that could be all the fuel this thing needs, even if the euro sort of stalls out some more. But if we're going to play a euro long story, I think this is what I'd want to be looking to fade to the upside. Looking at the momentum signature, it's still pretty constructive. Every pullback in momentum hasn't even gone for a real test of 40 before finding some sort of support. And as disclosure, I haven't had any exposure on this at all this week, but I will be looking to see what kind of exhaustion this thing can mark for continuation higher if we are going to head higher. At the end of the day, if we close the week below 166.90, I don't want to touch it. But if we close above this region, could be just a quick false break below support before another continuation higher. So an interesting setup. Just wanted to bring it to your attention. I don't know if I'll highlight it necessarily as something we're looking at on the intraday page, but feel free to take a snapshot of this chart if you need it for future reference. Okay, that's euro key. Quick segue. Oh, dollar CAD. Oh my goodness, 12.13. That's dollar CAD. We can't leave without saying that. What can I say about the loonie? This thing was frustrating as hell for us for a while. I know you guys remember that. We were trying to call the high in this thing, or excuse me, we were looking for resistance late last month. When that broke and finally cleared 125.90, it was just sheer bearish invalidation. And that's just based on the broader slopes that we've been following off the yearly high in purple here. Perfect pivot on both sides. Every break saw acceleration. Here was one that we were looking for. We pounced, break. We didn't quite make it into the upper parallel, but there was a very compelling confluence here region. And we also didn't turn even into that. So it could be an exhaustion here. 29.27 was a basic 50 of the yearly range. Again, it converged on the 50 line for the current descending slope. And we fizzled out just ahead of it. So look, the pullback I wanted to see go into 25.97. I don't know if you get it, just because now, as we get further out in time, that's going to take us below basic slope support off the yearly lows. So I don't know if you get quite down there, guys. And I do want to curb your appetite just a little on this decline. You know, it's been panning out pretty well. Here's what the intraday chart looks like. Here's the 240. You know, we were looking for a break below this parallel to get this thing going. We got it. Obviously, it's taken out most of the targets except the final one, which is 26.63. And that's just basic slope support. And again, a former swing high from the late October trade month. So I saw this here earlier, and I didn't like it. I don't like that candle there. So you could see I'll still see a little bit of a pop topside pop here. At the end of the day, the weekly opening range basically was tested and held. So although I do want to see it into 26.60, I just want to curb my appetite here a little bit. Okay, we'll bring down near-term resistance into the August highs again. It's going to give you 27.78, and again, that's sort of the support that needs to break to get this thing going for these targets here. All right. That is dollar CAD heading into the close of the week. All right, last but not least, gold looks like this. Here's number 14, and real quick, we'll go over some of the other interesting setups. Here's just a gold. I just wanted to give you a quick heads up on this. Look, we just came to an exact 100% extension from the advance off the low and slope resistance. So, you know, we were looking for a break of this slope since the start of the week. We got it. That's the first measured move, 1285. Again, it converged on this slope, which is a basic parallel off the lows. So could see a little bit more of a pullback. Well, let me do this. Get rid of that 618. Actually, we don't need that retracement anymore. This is my near-term bullish inval now on this breakout. Is down here. Okay, so that's 1272. I want to stay constructive above 1272 near term. Remember on the daily chart where this thing is coming off of, huge region. We've been talking about this forever. 618 retracement of the advance off the lows that we made back in July. 38.2 retracement of the advance off the lows that we made in December of 2016. That cushion region has been a key pivot in support. We opened the month right above that key support. You know, it probed through the monthly opening range highs twice now. So I want to see this thing start to show us more constructive price action. Remember, the broader picture, as we wrote in my quarterly forecast, is still 1240. Okay, so even if we were to get a drop below 1260, yeah, it could see another $20 to the downside, 23 bucks to the downside, but I still wouldn't get bearish on the overall encompassing trend here. As long as we're above 1240, you know, I just think this has been a massive correction. I'm looking for it to fizzle out. So, you know, the 100% extension of this near-term ascent holding would suggest that there may be more of a correctionary bounce here, which means we still need to make one more low. But I just wanted to highlight this region, 1286 and 1290, guys. Look for that break to really validate the reversal in trade here. Initial targets would be 1298 and 310, 309. Also, if we were to get that break, we'd start to look for some structure on the ascent. It's way too early to work with this slope, but just to show you what I would be sort of what I'd be entertaining, as it were, it gives you and highlights basically the same regions. And resistance in such a scenario, same level, 1310, 1309. So it's very encouraging when you see lateral levels of support resistance that you've mapped out in your analysis really mesh well with a decent slope. Again, I'm just showing this for your consideration, guys. This slope is way too early to work with. We don't know that that's a concerted low to focus on, but it may help near term kind of give us some picture. Puts the emphasis again, near term on the immediate break above 1290, and that would give us these topside targets. Here's the 120. Questions on the gold trade? And one last thing, I did want to just touch base on Ethereum. Oh, we are over on time. Ethereum, real quick, guys. We've been following this trade here as well. I just wanted to show you the breakout actually happened, finally. We were talking about the break above 303, specifically 312 was the big level for me. It was messy. These are all levels that we've been watching, and you saw that big whipsaw. Obviously, there's been major news on the Bitcoin side of things with that fork really being called off. Not enough consensus, quote unquote, amongst users for them to move forward with that split. So certainly that fork has been sort of the main headline that people have been running with. And if you take a look at Bitcoin prices, they just ripped yesterday, but certainly a very, very heavy reversal. The last target that I had that I was showing you guys was 80.68. We just missed that. We just failed right ahead the 80 handle for turning lower. But I'm not interested in doing anything on the Bitcoin side of things, guys. I think this thing needs to correct lower before we can get any type of interest of getting it back in on the long side. And as far as Ethereum is concerned, that one's cleaner. That one's cleaner. So here's an example, guys, of an objective monthly opening range break. Use your monthly open. You set a low. You set a high. You sit in that region for quite some time. You clear the high with definitive price action. We need to see it close above 1312 today to really validate the continuation higher. 320, excuse me, has already gotten that clip today, so that target's out. You really want to be focused on the 350, 354 level. Again, that's the high, not the high day, but it's the reversal day close for that massive outside candle we made there. And again, a basic 100% off the low gives you a range of 350 to 354. October highs, that's your breakout level. Near term, though, still like it higher. Okay. All right, guys. I'm sorry I went over on time. As always, I want to thank everyone who joined me for today. Again, a quick reminder, there won't be a webinar here on Daily FX on Monday. I will be on Daily FX on Tuesday, hopefully, if my flight gets in at a decent hour on Monday. And definitely on SB here as regular scheduled on Wednesday and Thursday. So till then, I want to wish everyone an awesome weekend. For those of you who are celebrating Veterans Day tomorrow, God bless, and we will see you all next week. Cheers.